And welcome everyone to ABLA's latest COVID-19 employer update series. I'm Joe Murphy, the Managing Director, National Workplace for Australian Business Lawyers and Advisors. And with me today is my fellow Managing Director, Iain Rennie, who is the Managing Director for Corporate and Commercial. Iain and I are going to talk to you today about a range of topics. We're going to give you a general business overview and talk about the current situation in Victoria. We're going to talk about the JobKeeper 2.0 and what's different as we know it now. We're going to talk to you about some key dates and then the paid pandemic leave arrangements under the Modern Awards and the federal government's pandemic disaster leave payments.
And questions.
And questions. And then we're going to deal with some questions. Yes, thanks, Iain. So moving into the business overview, just touching on Victoria first, I think it's important that we start with Victoria. You notice Iain and I had our ABLA masks on to start with. We had those on not because we wear them every day, but we are noticing in Sydney and New South Wales that people are wearing masks more and more in advance of the anticipation that we might find in New South Wales that we end up with similar rules that are currently applying in Victoria, and we're going to talk about those rules a little bit in a minute. So when we talk about Victoria at the moment, it is quite a serious situation down there. The rules are such that from yesterday at 11:59 p.m, workplaces in Melbourne must be closed unless they are part of a permitted activity or all the employees are working from home. The employers that require their staff to attend site must issue a worker permit to their employees, so they have to find out if the employee is a permitted worker. And the way you can find that out is we have a link up here on the screen. You can see that website there for the Department of Health there in Victoria. There's also a list of permitted activities, and you'll see there on your screen that there's you can download at the top of your screen, I think it is this little blue arrow. You can download the permitted activities, so you can have a look at what the permitted activities are, so you can get one of those permits if you need one for your workers. It's really important that businesses also have their COVID-safe plan in place by 11:59 p.m. tomorrow, Friday the 7th.
We had a look at the regulation for our own purposes for one of our colleagues who works in Victoria, and whilst there are many categories, each of them are very specific. So we couldn't find for our own sake any relief. So I'd say people be careful, and the intent of that regulation is very specific. By the way, I think the individual fine for non-compliance is high. It's in the order of $9,000. And for businesses, I think it's almost 10 times that.
Yeah. No, so it's very serious stuff down there in Victoria, and we're thinking of you all. A few of the other rules from a health and safety perspective is also that if you have an employee who contracts COVID-19, it is a notifiable illness, so you need to notify WorkSafe Victoria that has occurred. And from 11:59 on the 2nd of August, everyone in Victoria over the age of 12 must wear a face mask when they're outside of the home. So that's really important. And when you're an employer and you've got employees in the workplace, you've got to take all reasonable steps to make sure that your employees are wearing masks at all other times in the workplace. We've also got the WorkSafe website up there if you want to visit and have a look at what the rules are around WorkSafe and the health and safety requirements. It's also really important for those of our viewers in other states and territories that you check the relevant rules in your state or territory, because they are all just a little bit different. Unfortunately, we don't have time today to go through all of them in detail, but as you can always do, reach out if you've got any queries.
Okay,
Iain,
all right.
2.0, what's different?
Not much, but in some respects, it's the consequences that really matter. So before we just jump onto a few slides which go through the differences, I just want to give you some context, just so that we understand why there are changes coming up. The existing scheme, the one we're in the middle of right now, was only mandated for 6 months. It finishes on the 27th of September. It was always intended that there would be a mid-scheme review, and that's in fact what happened. So we had a mid-scheme review done by Commonwealth Treasury. It got all the information from the first 2 full months of JobKeeper. It got some live data from the 3rd month, but not a complete 3rd month. And it got a lot of ancillary stuff from the ATO as the scheme administrator and the ABS. And they also went out and about and did a lot of approaches directly to employers and employers groups just to find out what they thought of the scheme. So their report came down on the 29th of June. And so just if you pause for a second, 29th of June, how does that relate to Victoria and COVID? It's the very beginning of the Victorian episode, but not very much into it. So the report itself gives a thumbs up to JobKeeper. It does make several references to the fact that whilst sectorally there are challenges, overall the Australian economy and its participants are responding very positively to JobKeeper. And they thought, if anything, Australia was a bit ahead of the curve. So their conclusion was, though, that JobKeeper should be extended. One of the fundamentals was that businesses needed 6 months certainty, and mid-scheme they thought that they needed more time because things were good but not great. So they came down and they wanted to make a series of discrete changes. The first one is duration. So on the screen now we have duration. So what they've come down and said, yes, extend the scheme for a further 6 months. But in reality, when you have a look at it, it's 2 periods of 3 months. So we've got them there as the December quarter and the March quarter. That makes a message, or it gives a strong message. We're not running on a 6-month timetable now. When we transition, we're going to move into 2 periods of 3 months each, and there are going to be different consequences as you go. The second recommendation was eligibility. Treasury said that there was an issue, which was that the one-size-fits-all, $1,500 for everybody, and the once-only test caused some distortions and disincentives. Yeah. There was also the issue that not all industries or sectors could participate. So if you had a largely casualised workforce, aviation, tourism, entertainment, you were largely standing outside, and they're doing it tough. But they thought it was too hard to change that representation, so they said keep the broad cover but change to an eligibility test so it's more on a needs basis. So now what they're saying is for the second period of 6 months, and in fact it's for the first period of 3 months and then again for the last period of 3 months, participants should now submit to a new eligibility test. That's the wage subsidy. We'll go back. If you just go back for a second, Joe. So what's going to change is it's not once you're in the scheme, you stay in the scheme. If you're going to transition from September into 2.0, you will have to pass a decline in income test, which is based upon the previous 2 quarters. So it's quarterly long, and you must look and provide actual numbers to show that you have sustained a 30% or greater decline in your turnover in order to pass through. And then if you want to pass through at the end of the first quarter of JobKeepers, you've got to do the same test again, but by reference to the previous 3 calendar quarters.
So there's a lot more, excuse me, there's a lot more rigour around this assessment process than there was for JobKeeper 1.0.
Yes, there is. Again, JobKeeper 1.0 is a big macroeconomic project. They wanted it to be very broad-based. They wanted it to be simple to administer. They wanted to use the private pay system as the channel to employees to get it out there. And part of that was because that's the most efficient delivery mechanism. They also wanted to shield the Centrelink and Services Australia regime because they already had too much work. And so they pushed it towards ATO. ATO is a regulator regulating what it knows best, which is employers. So that worked well, but it was general, it was simple, it was fast. Now they want more rigour because they want to try and correct some of these distortions.
Yeah. And of course, they've also included the...
Yeah, much more discriminating, yeah.
A staged payment that will depend on how many hours a person's working.
So this is a curious one. Again, this is an attempt to even up what they call the distortion either the wage subsidy, but more particularly the income transfer. That is people who are getting paid the $1,500 when they're normally only getting much less than the $1,500. Yeah. So they wanted to have a discriminator. The alternative was that they could put a new compliance test and reporting test on employers, which is keep records for every fortnight, send us hard records and prove what the hours being worked by all your employees are. Treasury said that's too hard, too expensive, too hard to administer. So they've pushed for this test, which is based upon the New Zealand model. And what it is there's a once-up test, which is there's a 20-hour-a-week average working in the 4 weeks prior to 1 March, effectively February. And if you're above 20 hours a week, you go into the top tier. If you're below 20 hours a week, you go into the bottom tier and you stay there for the remainder of the scheme. So there's now a discriminator. That's part one of it. Part two of it is, though, we've got a step down. So we're moving from the one-size-fits-all $1,500. We go into quarter 3 of JobKeeper, quarter 1 of JobKeeper 2.0. We go from $1,500 to $1,200 for the top tier and $750 for the lower tier. 3 months later, we move down to $1,000 for the top tier and $650 for the lower tier. There's an interesting alignment, which frankly I'm not sure of at the moment, but there's a point in time where the JobKeeper payment begins to crawl above the lower tier of the JobKeeper payment. So you can see there's a coalition and a union of the different support services there. So I'm not sure whether that's deliberate or not. I suspect it is, but there's an alignment there. So that's quite a different test.
It certainly is, and we've had a few questions around the 20-hour test.
Yeah.
And they'll look at the person's ordinary hours of work over each of the 4 weeks of the pay periods prior to March the 1st, so February, and do an assessment about that. There have been some questions about, well, what do we do if the person didn't work their ordinary hours? And we understand that there's going to be a broad discretion given, well, at this stage where it's indicated to us that there's going to be a discretion given to the ATO about how they assess someone's, or how they might supplement that in circumstances where a person has not worked through February and can't be assessed on those ordinary hours of work. It's
a fairly blunt test and it's a bit obscure because, again, the fundamental qualification to be a JobKeeper employee is you've got to be employed from 1 March forward, yet they're looking at a period prior to that. So I guess it's just that they need a test period, and that's the test period they selected. It's also not referable to your actual workload over the last 3-6 months.
No.
So again, it's a fairly blunt tool. We are expecting some form of assistance as to what discretions there may be or ancillary tests. Again, somebody could not have been employed by an eligible employer at that time, and they've come on in. But I suppose one thing just to assure everybody is that it's not a test to exclude you. It's just a test to sort you out on the top tier or the bottom tier.
Certainly is. What do we know about the costs of the scheme?
Okay. 2 things here. This comes from a statement of the Treasurer about 10 days ago when he was making the announcement. So the first thing is an answer to a question. How much has JobKeeper cost, and is it going to cost us for this current stage? 70 billion for the first 6 months. How much is it likely to cost for the second stage of 6 months? 16 billion. So you just line them up and you go, they're quite different numbers. How does that work? Now, of course, there's a function straight up that the amounts being paid out are different. It was beyond me, but I tried to sort of reverse engineer it all and see if I could get the numbers to work out. But I then found a separate statement from Josh Frydenberg that said that the expectation, so where are we now? JobKeeper 1.0, 3.5 million employees assisted. The expectation for the first stage, first quarter of 2.0 is 1.4 million employees to be assisted.
It's a pretty big cut.
It's a big jump, jump downwards about 2 million. And then for the final 3 months, a drop from 1.4 down to 1 million. Now, these are estimates. And again, the estimates are based upon the best available information and analysis up to about the end of June, maybe a week or 2 after that, because the government took the report forward and made its own considerations. And so they were based upon a view that Australia was not uniformly, but generally moving forward quite well. And the Victorian experience in the last sort of 4 or 5 weeks has really called that into question. But if you look at those numbers, a drop of 3.5 down to around about 1 million, that's telling you that there's going to be a lot of people who are not transitioning.
We don't know if it'll be enough, but we'll
that's the issue. The estimates may in fact just be missing the mark, and the 16 million may in fact become a much bigger number.
Yeah. We've just included this table as a bit of an easy comparison to demonstrate when we transition from JobKeeper 1.0 to 2.0. And you can see there the decline test is the same. That's unchanged.
Yep.
The comparison period, as Iain has already said, is different because we had the turnover test originally around the particular calendar months, and now we're moving to the quarterly assessment.
Correct.
Yeah.
Correct.
We will make the presentation today, the recording available, so you can go back over it and have a look at these figures again if you want to go back and see what we've written here. You'll have a record of that. The revised rules, we're still yet to get the details around the JobKeeper rules. We still don't have yet the black and white detail around 20 hours, what's going to happen with that. And we just don't know how the ATO is going to apply this discretion. It's
true. So being really blunt about it, we've got about 3 bits of paper out of the government which talk about it in detail. But there's one of them, which is the Prime Minister's announcement, where he says that when the first scheme was announced, it was a generalist scheme and they wanted fast, quick response. And so they didn't need a lot of detail. And he also said, we're going to need some time now to create this version, so don't expect anything for a month or so. So we don't actually have the rules because JobKeeper is run by a set of discretions which are called the rules. So there will be changes to those. There'll also have to be aligning changes across the board. ATO's got some fantastic materials on its website. They've developed discretions along the way as they've administered things because the rules were general. And so, for example, we had one test for the turnover. The basic test became, the basic test plus the modified test became then after that a series of discretions. How are those things going to roll forward when we've got a new testing regime? Now there's one thing, there's one hint that we do have is that there will be more compliance because they're looking at a more rigorous test. So they are looking at the moment, on what we've been told, actual GST turnover. What that phrase means, we don't know. It's a defined term out of the tax legislation. So whether they're going to rely upon that as the linchpin for everybody, we don't know that. We do know that a lot of people don't actually have to use GST and BAS because they're just not big enough, sophisticated enough to do it. So there's going to have to be more detail coming through about it. One thing that is also interesting is there will be, let's just focus for a second on the actual GST. So actual means real numbers. Real numbers means that you just can't finish a quarter and have the numbers available. It's going to take you some time to go through your accounts, get your real numbers, get them reviewed, audited or whatever, or aligned. So I think the September quarter, the one beginning at the very end of September, sorry, it's the December quarter, but for the preceding period, you will, you will be a month into the first quarter of 2.0 before you'll actually have to file your BAS statement. So how you actually deal with the numbers up until that time and file your BAS statement and then try and prove what's happened in the preceding quarters, I don't know. There's a timing issue there.
Well, it sounds like there could be some real difficulties, but one of the things the government has done is that where there has been a difficulty with the rules, they've made modifications.
They haven't in one, but I just, and I think that must be the case. But I do think, again, there's the obligation to pay wages because it's a subsidy. So if you are there or thereabouts about transitioning, but you don't know if you're over the line.
Have you got the money in the bank to pay it in advance?
So do you just grasp the nettle, assume you're going to transition, but you've got to pay maybe 2 whacks, three fortnights before you find out whether you're going to get reimbursed or not? Don't know. So sort of watch this space. The information will come out and we'll feed it back as and when we get it.
There's a number of red flags that we want you to put on your agenda or put on your to-do list or your watch list, whatever you want to call it. And this is one of those things that we want you to keep on your list. We will come back to you when we've got the details with another webcast. Once we've got that detail and we can give you some more surety around that. But this is one of those things you need to put on your radar. There's a number of things today, and this is one of them.
Yep.
And this is another one.
Oh, yeah. And this one's over to you, Joe. I'll just set it up for everybody. When JobKeeper came in, it sometimes is forgotten that on the same day in the same legislation, there were a series of legislative temporary changes to the Fair Work Act. deliberately designed to facilitate JobKeeper. So he gave, for JobKeeper participants, employers, a set of revised rules about how to deal with the pandemic situation. And then you got the wage subsidy in the parallel scheme. How do you think it went?
Look, Ian, I think it was much needed. The pre-COVID Fair Work regime was quite rigid and very difficult to work with in these difficult times. And the whole reason that they provided the modified rules was to make sure that, or at least put businesses in a position where they didn't have to run around making people redundant or acting unlawfully. And that meant that the modified rules softened the pre-COVID Fair Work rules or Fair Work laws so that businesses could find it easier to stand people down. It could find it easier to modify people's working days, modify people's working hours, modify the duties that people work, with the view that it would keep people employed. Now, I have to say that from what we've seen, it's been very successful. And I think that's because it's gone hand in hand with the JobKeeper payment. And on that basis, at large, it's been successul. So we do know that the government have said we're not going to roll over the current rules as they are.
Because they have time to end. It's a hard finish on the 27th of September for the IR.
They are, yeah. They're not going to roll over the rules. I think there was probably a promise made that when the deal was done and everyone shook hands, the unions and the government and the various political parties said, the ones that agreed, said that we won't take this beyond 27 September. So these laws come to an end on the 27th of September. The question is, are there going to be any other arrangements? And that's another red flag item for our viewers. You need to keep an eye on what needs to happen after that date, because if there isn't going to be anything after that date, you need to be reviewing what you currently have in place. Because if it goes to back to pre-COVID Fair Work laws, then they are pretty stringent, pretty straightforward, and you don't want to find yourself stepping foul of those pre-COVID laws. There, at one point, the figures about increased applications to the Fair Work Commission was a 70% increase in applications. That would have been a combination of unfair dismissal, general protections claims, and of course the JobKeeper disputes that have come about, because even with the new regime that has, I've said, anecdotally, we believe it's been a great success, there are still disputes that arise out of that. And so the Commission has had to deal with those. The Commission's done a fantastic job from what I can see and anecdotally what we've seen in managing all of that. They understand that these are tough times for businesses. They understand it's a tough time for employees, and everyone's just doing their best to try and resolve these disputes.
There's a hint that came out of the Prime Minister when he's doing the JobKeeper announcement. So there was some journalists who saw this point and they said, so what are you going to do about it? I mean, has it run its course, or is there something else going to happen? And he was very clear. He came out and he said that in some respects, you can't talk about JobKeepers unless you're talking about this particular package and the success of JobKeepers, and this is referenced in the Treasury report as well, not solely, but very large part, the success has been because of this package. It's provided a new base to allow quick decisions to be made, which have retained employees in the system, and by that retains cash flowing down. The Prime Minister said that he wasn't going to abandon the idea, but he's just not going to roll forward with this one, and that he complimented the various participants in the IR ongoing debate about their consensus, but said that if the consensus didn't extend to all things, then he will legislate.
Yep.
But we don't know what that means, and we don't know when that's going to occur.
No. And once again, it's a red flag item, and so when we understand what that detail is, we will again come back to you all about that and have a little bit more detail for you, so you'll understand what's going to happen. No doubt it will be in advance of the 27th of September.
We hope.
Well, we'll get something before then.
Yeah.
But true to the way that the federal and state governments have been operating, it might be only a matter of days before the end of that period. And we might be staying up till late at night, like you and I were, Iain, watching the legislation move through Parliament last time.
That's right. Okay, can I just touch on something?
Oh, yeah?
At the very bottom. One thing we don't have yet is a clear view on the various state-based support systems. So we had, the obvious one is the rent relief scheme. Each state eventually came out with its own package. They're all hanging off JobKeeper 1.0. So we don't know yet what's going to happen with those schemes, whether they're going to roll forward or roll forward in the same way. That'll be interesting to see. It'll also be economically significant. The other one is that we've got elsewhere around the feds, different pieces of legislation, a number of them coming out of the Corps Act, where they've given, I suppose, relief against certain things because of the stringencies of COVID. We don't know if they're going to roll forward. Now, the one that's easiest to see is the Safe Harbour, which is effectively the business owner directors scheme. Broadened the defence, made it a much simpler defence. It's tagged the JobKeeper one. Is that going to roll forward? So watch this space with these ancillary items as well.
And that really leads you into these points, some points about really, I've talked about these red flag things you need to be doing. And so, Iain, in summary.
Okay, we've got about 5 or 6 points, but they all sort of boil down to the same thing, which is we've got 2 months to go. We know we've got some new rules coming in. The first thing everybody needs to do is to begin to understand if they want to transition, if they can transition. So you need to look at your numbers, look at your records, understand what is your desire and whether you can achieve it or whether you need to do things. So that's the first one. The second one, I guess, is picking up on an issue that Joe raised, which is if you're not going to transition, and frankly, even if you are going to transition, there's no Fair Work Act new package. You're going to have to be aware of what you have done with your employees under the relaxation regime or the flexible regime, because you may have to reverse out of that. And that could have all sorts of ramifications.
It certainly does, and it means revisiting all of the arrangements you've put in place. So what we're asking you to do is right now, put something in your calendars and make sure that you are revisiting these arrangements before you get to 27 September. Obviously, we've said we'll come back to you, but if you don't do that, you do not want to roll over with those current, with those new arrangements that have been in under JobKeeper if it reverts to pre-COVID arrangements.
This is fairly obvious, but very important. Look at your solvency, look at your cash flow, look at your funding, look at your workforce, look at your operations. Is this the time to begin to restructure, plan for restructuring? You need to know what's going to happen. So you need to get on top of these issues now. You need to get yourself planning, thinking, and even working out timelines to get ready. So your first timeline, though, is going to come up at the end of the 27th of September, which is the end of JobKeeper 1.
And there's a whole range of reasons why you'll be doing that. I mean, one of them is, as we said, this is an issue that you need to be looking at because the legislation's coming to an end as it currently sits. And a lot of these other legislative arrangements, temporary legislative arrangements being put in place, are also coming to an end. And because we don't know exactly what's going to happen after that date, it's really important you review it. But a number of the businesses we're talking to at the moment are not just thinking about, but actually taking action around remodelling their businesses for a range of reasons. One is your business going to look the same even once COVID is over? And I think for many, many businesses, they're not. I know that what we currently do and the way we currently work probably won't look the same.
Yep, I agree.
And we were bursting at the seams in our office. We needed more offices, more seats, and all of a sudden we're thinking, maybe we don't need extra offices. We could put more people on and work within the same space that we've got. So real estate has been a big issue for businesses to review. So there's a whole range of reasons why you'll be reviewing what you're doing. Headcount's another one. Iain's just talked about restructuring the business. Iain's talking in a broader sense. Obviously, he's talking about the business as a whole. But obviously, when we talk about workplace, we're talking about staff. And we're talking about whether or not your business can carry them through the next 6 months. Fantastic if you can, and you can see a future for those people in your business. But likewise, you also need to be asking, in 6, 12, 18 months' time, what is my business going to look like? Don't just think about what's going to happen on the 28th of September.
We've also had a period where the banks have been very much a player in all of this. They've almost been a deliverer of their own policy, and it's been a fairly supportive sector. Is that going to stay the same for the next 6 months that goes? So there's a whole bunch of moving parts. and we're going to come to an end of the first stage, and things are going to change. So it's now time to actually focus on these issues and become very analytical and work out strategically where you should be moving to.
Absolutely. I mean, we've seen examples of businesses that have evolved already, and they're doing quite well. But on the main, your traditional businesses which support the community, retail, and businesses in that are finding it very hard to operate in circumstances where they're just not getting the foot traffic. That's a different story. As Iain already said earlier, one of the things you need to put on your list is this issue about what's happening with these ancillary relief schemes. They're not just federal schemes, so we need to keep an eye on your local state government and territory governments, the arrangements have been put in there. The other thing is we're going to talk about this in a minute, the $1,500 paid pandemic leave payment. I've got a couple of slides, we'll talk about that. Key dates. Now we just wanted to include a key date, couple of slides on key dates, because we think these are dates that are even important because they've passed very recently, or dates that are coming up that you need to be conscious of. Now, I'm not going to go through these in comprehensively, but I'll just talk about the new ones. So the 29th of July through the 29th of October, we have the new provisions in the modern awards. I'm going to talk to you about that detail in a minute. I've got a couple of slides coming up. On the 5th of August, so yesterday, we had the federal government's pandemic leave disaster payment, which they're getting in Victoria at the moment, or they have an entitlement to claim it in Victoria in certain circumstances. Again, we've got a couple of slides to talk about with that. And then we've got the 4th of January, which is the turning point for the end of the next quarter, or the first quarter of 2.0,
yeah.
And the commencement of the second quarter for 2.0. And the 28th of March is right now the date where JobKeeper is flagged to come to an end altogether.
Yep.
And I would not count necessarily on much happening beyond that date, because they're spending a lot of money between now and then, as well as all the money they've already spent. So we might find that is the last thing we see when it comes to JobKeeper.
There's I suppose, an interesting parallel timeline, which is JobSeeker. And so JobSeeker's begun its journey into a morphed form, but a lot of that sort of comes to an end at the end of this calendar year. It does, and
JobSeeker's obviously been affected by this. There was quite a large increase in the payments made, and that's now going to, I understand...
it halves, I think.
It will, and on top of that, it's anticipated that the JobSeeker payment would be more than it was pre-COVID, hopefully. So just dealing with the pandemic leave, as I've just said, from the 29th of July, the Fair Work Commission decided that they would implement these provisions to enable employees in the aged care industry. Now, that's across 3 awards, those amendments, for businesses in the aged care industry, and those awards are up here on the screen: the Aged Care Award, the Nurses Award, and the Health Professionals and Support Services Award. And the way that works is that each time an employee has to take the leave, they get up to 2 weeks of paid leave. Now, that's each time. Now, that is triggered because they cannot attend the workplace because they've had to go into isolation, quarantine, or they have contracted COVID. Now, I should say, if they have contracted COVID, that's a relevant consideration because of one of the exemptions here when we look at the reasons why an employee could not take this leave. And so the exclusionary factors are people who are true casuals, they're not regular and systematic, they're out, they can't claim this leave. But employees who are casuals, who are regular and systematic, they get access to the leave. That would be a great relief for the unions. That's been something the unions have been agitating for a long time. Let's give casuals some sick leave. And it's not really sick leave, it's actually a different form of leave, because if you are sick, then one of the exclusionary factors is that they need to claim the sick leave.
Oh, yes.
They don't
preserve
claim
sick
this leave. That's right. They go through any accrued sick leave they have first. And that's the second dot point up there. They're entitled to take their paid personal carers leave. The other exclusion is if they're on workers' compensation payments. So if they're in receipt of workers' compensation payments, they're getting paid. Yep. They don't get the leave.
No double dip.
That's
yep.
it.
Yep.
The payment for full-time employees is at their base rate of pay for their ordinary hours of work. And then there's a bit of a formula for working out part-timers and casuals. Part-timers are paid at the greater rate of either their ordinary hours of work for an average weekly ordinary hours or their average weekly ordinary hours over the previous 6 weeks. And then casuals is the average weekly wage over the prior 6 weeks as well. So there's an assessment there to work out how to pay them. What then sits at the bottom of this hierarchy of all of these payments, we've got JobKeeper, we've got paid personal leave. We could almost had a bit of a pyramid here that showed how it cascades down. In Victoria, there's some state government incentives that are being paid out, or I shouldn't say incentives, but support payments that are being paid by the state government down there. And it's really important that all of those are something in your contemplation, because before you pay the government's paid pandemic disaster leave payment, you have to go through all of those requirements first. And I think that if you want to, the pandemic disaster leave payment is only paid when you're not being paid anything.
So this is the safety net.
This is the safety net.
At the very bottom.
It's the last resort.
Yep.
The government have said, look, we're concerned that there are people falling through the cracks. We're concerned that people are not getting certain payments, or they might not have sick leave, or they might not have annual leave, and they might not have any entitlements. And as you can see here, it's a $1,500 payment. Each occasion they're unable to work, where they're required to isolate, be quarantined due to COVID, or if they contract the disease. It also applies where you have to support someone, where you have carers' responsibilities. For a child under 16, child 16 or under, I should say, who has contracted the disease or who has had close contact with someone who had the disease.
So just on that, not have any sick leave entitlements, etc. How does that play out in regard to casuals who won't have sick leave?
Well, they would get the payment, I think, if they're able to demonstrate that they're entitled to receive it, applying all of the criteria.
Yeah.
But you work through the cascade. In order to be eligible, are they 17 years old, at least 17? Do they live in Victoria at the moment? This might be made more broadly available if we found that, for example, New South Wales went into a similar disaster lockdown, that they're unable to work for a COVID-related reason. That includes you're not unable to work from home, that you don't have any sick leave entitlements, including paid pandemic leave under the award, that you don't have any income, earnings or salary coming in from anywhere, and you must not be in receipt of any social security payments. So that means your study leave pay, paid parental leave. There are some other rules around it. To be eligible, you can't also be in receipt of JobKeeper and not the Victorian COVID worker support payment that I mentioned a moment ago. And so what it is, you get up to 2 weeks paid pandemic leave on each occasion where you're prevented from working. And as I've already said, if you're a casual, you can't take the paid pandemic leave where you are not regular and systematic. And you're not entitled to take it if you're on paid parental leave or workers' compensation is another one that we should keep in mind. So really, I think the best way to think of it is it's the last resort. It's what you called it a
safety net.
A safety net. It's the last resort. It's the safety net when you've exhausted all other avenues. Once you've worked through those, let's deal with some questions. We've actually got some time for questions. So we've got one here. Do you need to notify WorkSafe Victoria if an employee contracts COVID-19 when working 100% remotely? Look, you still have obligations for your employees in the same way when they're working from home, when they're in the workplace. So it's really important you think about this as it's a safety issue. The answer is yes, you need to notify. And obviously if they're working from home, the investigation that ensues will be slightly different to the one they work in the workplace. But yes, the short answer is yes. We've got a few other questions here. Hi, will the government assistance and PAYG assistance be part of the income declaration or not?
That's
Looks like a tax question.
That's a tax question,
Yes.
I think. Yeah.
Do you have to qualify for the 2 quarters to continue receiving JobKeeper or one at a time?
No, you'll go through the gateway each time for the next stage. So you'll retest. Test at the beginning of the first quarter, retest again at the next quarter. When you retest for the last quarter, you're going to go back 3 quarters, and for each one of them, you've got to prove you've sustained an ongoing decline in business. Turnover, sorry.
Yes, and just remember, just comparing it with the first one, the first JobKeeper 1.0, you only had to qualify and you were through the gate. So what, as Iain said, you need to re-qualify.
That's right.
Yeah.
So that's one thing I suppose to take away from this is that they haven't touched JobKeeper 1. So you're in right up until the end of September, but thereafter you've got to re-qualify on slightly different rules, which are probably more stringent.
There's another question here. As the owner of a business, I do not keep timesheets, but do pay myself by commission, which is fixed each month/fortnight. Will I still be able to claim JobKeeper? Well, the rules around, so I'm assuming that this person's claiming it as a principal of a business, or similar to the sole trader registration where they're in receipt of JobKeeper. The tax department had some discretion around how they were calculating that and dealing with payments there. In short, I think the answer is probably yes, because they weren't going to change those rules. We will clarify that, however, if it does change, because we haven't seen any changes yet.
I agree with you, Joe. There's a small remark in a fact sheet which says that they are keeping that regime intact. So I think, yes, I agree with you.
We've got a 20-hour question here, which is good. We've got lots of these. Just in regards to 20 hours worked, is this what the employee was working in March, or is it looking at what hours they are going to work in October onwards? No, so the 20 hours is actually an assessment of February. March is the reference. It says prior to the 1st of March. I know governments love to do this and they love to do it in legislation. They pick a slightly misleading visual reference and then confuse things by saying, oh, it's the 4 weeks prior to that date. So it's actually the 4 weeks in February, the last 4 weeks of February.
It's your average. It's an average of 20 hours over the 4 weeks, the preceding 4 work weeks, which is February.
Yes. Yeah. Will there be a JobKeeper 3.0 if there were no vaccines? Could other industry sectors follow the childcare sector, who is the first to no longer have access to JobKeeper altogether? I think we've already sounded this warning. There may not, I think there's a good chance there won't be a JobKeeper 3.0. I think that businesses, as Iain has already said, businesses need to start thinking about what they're going to look like in 18 months' time, 6, 12, 18 months' time, and looking at whether or not they need to be restructuring. We hope that there are arrangements put in place before the 27th of September from a legal perspective, both in relation to the ancillary arrangements, the Fair Work arrangements, and JobKeeper that support businesses right through, not just until the end of March, but beyond. But don't count on it. At the moment, let's work with what we've got. And that means we've got till the 28th of March to work out what we're doing.
I agree with that. I mean, again, it's policy, but I think the message has been given.
If an employee, next question is, if an employee was on sick leave without pay for all of February, what are they still eligible for JobKeeper? If they were eligible before, then they've qualified. But if we're talking about are they going to be eligible under the new assessment based on the 20-hour assessment, yes, as we've already indicated, the ATO is going to have a discretion and they will have an alternative way to calculate the 20-hour threshold through February, because they have contemplated that will be people that will not have worked during that period.
People will be on leave or sick or whatever it is. Again, the 20-hour test is not going to exclude you from participating in JobKeepers, but it will allocate you between upper tier or lower tier. So that's the worst that can happen to you. But I agree with you, Joe. We're looking for some more detail, and it's been indicated that there will be some, but we don't know it yet.
There's another question here. An employee on self-nominated unpaid parental leave just prior to COVID starting. We are currently paying them JobKeeper as their government paid parental leave has been exhausted. If they elect to stay on unpaid leave longer, to keep getting JobKeeper. Is this permissible? Look, under the current scheme, if they're being paid it, you can extend those arrangements where they can remain away from the workplace. And I anticipate, without the detail around this to understand exactly the circumstances, that you probably could continue to. But I think until we get the rules and we understand exactly what the rules are in detail, I'd have to say that we need to revisit that question. It certainly can be done under the current regime, as you're already doing. I anticipate it should be able to be continued, but I think we just need to have a look at what the new regime.
I agree with you. I think as matters stand, on the bare bones we've got there, the answer is probably yes, but watch this space.
How will business participants' payments work now under the alternative test? Well, I think we've already said, haven't we?
The alternative test is, at the moment, we neither have any details as to the removal of the alternative test or the modified test and the discretions, nor do we actually have any details as to change of the discretion. So again, this is watch this space. I think our anticipation is that the current discretions will remain, but we have to be modified for the new tests. So again, I think just bear with us.
Now, what is the current required notice period for forcing annual leave on employees? Previously, it was 1 week, unless it was otherwise agreed. Well, it will depend in what industry and the like you're in, but it's important you keep an eye on those regime, because that may not be available beyond the thresholds that are being applied here. The ability to force individuals, well, it's not really forcing annual leave. I mean, you direct someone to take leave, and they have to do it unless they have a reasonable basis for not doing it. So it's not really forcing them onto leave, but it is requiring them to take it in circumstances where it's reasonable to take it. It's important that beyond the threshold dates that we've got here, and in some awards, that ability to direct people onto leave was included in the schedules of the awards. Likewise, people covered by JobKeeper, where the JobKeeper rules applied, there are also rules about directing people to take leave, also to the extent that it would only leave them with 2 weeks in the bank rather than 4 weeks, and in accordance with the pre-COVID rules. But it's really important that you understand, I'd ask a bunch of questions in connection with this question before I could give you a straight answer. Are they covered by JobKeeper? Are they covered by an award? Are the circumstances reasonable to direct the person onto leave? All of those things are either coming to an end, and under some awards, some of the variations have already come to an end. For example, under the Clerks Award, Schedule X came to an end on the 29th of June. So that ended at that point, and they haven't renewed that, whereas a range of the 99 awards that were amended, a very large number of them have had the schedules continued until the end of September. So it's really important that you understand which award applies to your employees, whether or not they're on JobKeeper, as to what rules you should apply.
So your answer there just sort of throws up into stark contrast why the Fair Work flexible regime was brought in, but also what's going to happen if we don't have a replacement. I mean, the length of that answer sort of, and the amount of qualifications and details and such like that, just makes you say, please, can we get this part resolved? But this uncertainty needs to be brought to an end.
It certainly does. We've got here a casual employee wants to take a week's holiday and is on JobKeeper. Does the employer have to keep paying JobKeeper even though as a casual they don't get paid holiday pay? Look, if you receive $1,500 for an employee, you have to pay it to the employee.
But again, the way it works, remember, it's a wage subsidy in arrears. So if they're not normally getting pay while they're on leave, then you don't incur the $1,500, so therefore you don't claim it.
That's right. But you just got to understand that if you receive any money for JobKeeper, it's really important it gets passed on because
Yes.
it's not yours.
It's not yours.
It is to support your business, but it's a wage subsidy. So it's actually meant for the employees, but the benefit is it comes through your business and through to the employee, and it means you can continue to employ someone and pay them for that period. Another question. We've got time for a few more questions here, actually. If we've already consulted with employees about who have been stood down, do we have to consult again, extend stand down past 27 September, assuming we're eligible for JobKeeper? My answer is yes, I think you do. The current regime, so my answer is, firstly, as we've already said, the current rules under the Fair Work regime will come to an end on the 27th of September. We don't know exactly what they will be from the 28th of September onwards. But what I can say is that I think it's highly unlikely that anything is going to be put in place that will allow you just to continue on with the current arrangements. They were always anticipated to come to an end on the 27th of September when they were put in place and those directions were given. So you would need to review all of that. And the answer is you probably will need to consult with employees again before you enter into a new phase of stand down. Now, if you've got someone who's legitimately stood down in accordance with the rules and you need to stand them down for a further period, well, obviously you can start your consultation while they're still on stand down. And so you don't have to have that scenario where you've got an individual who comes back to the workplace temporarily. What happens if someone is a part-time worker and joined halfway in February and is currently eligible for JobKeeper 1.0? Would they be eligible for JobKeeper 2.0? Well, we've already talked about the ATO regime.
Yep, the short answer is yes. But again, it's a 20-hour test. Are they going to be on the top tier or the bottom tier?
Yeah, and where they haven't worked for the 4 weeks, the ATO will probably take the 2 weeks they worked and benchmark it that way.
That's right. Yeah. That's right. But 1 March is the eligibility threshold test. You've got to be an employee from 1 March forward.
How will the changes be assessed regarding income if the business was only started in July 2019?
That's a classic question which came in 1.0 as well, where you're looking for comparable periods where you really didn't have the track record. We are expecting the ATO to retain its discretion so that you will be able to get a modification to the test because they want to keep you alive. So again, we can't give you definitive answers, but that's our expectation.
We've got a good question here, and we've had a few of these in the past. We have employees who refuse to work hours above contracted hours and going off on unpaid leave due to getting paid JobKeeper. Is there anything we can do? Look, if I make a number of assumptions, obviously, you know, being a lawyer, we like to know the details and make sure that the advice we're giving is in the context of the particular question. If I assume that person is contracted to work a certain number of hours, now that would normally suggest that they're a part-time or full-time employee. If you've got a part-time employee who's, for example, contracted to work 30 hours a week and they are refusing to work hours above their contracted hours, and they're going off on, there's 2 questions here really. One is they're refusing to work contracted hours, and the other one is they're going off on unpaid leave. So the first one is where they're refusing to work hours over and above their contracted hours. You have to look at really what arrangements you've got in place. If you've got a provision in your contract requiring them to work reasonable additional hours, and the circumstances are reasonable, where they're going to get paid for those hours, then they should really comply with the direction or the requirement for them to work those reasonable additional hours. I would need to know what the circumstances are to come to a view about whether or not it is reasonable, but they should be working those hours. Where you've got an individual who's taking off unpaid leave because they're getting JobKeeper payments, that shouldn't happen. If they're contracted to work hours, they can't say to you, I'm not coming to work, I'm just going to get the JobKeeper payment. If you've got a person who works using the same scenario 30 hours a week, and you happen to be subsidising their salary or their wage by receipt of the $1,500 a fortnight, whether or not that covers the whole salary is another question, but they can't just take unpaid leave. What you would do is give them a direction to return to the workplace and do their work, and if they don't, it becomes a disciplinary matter, in which case I know there's lots of people out there looking for a job.
So as I understand it, I mean, the only way that broad fact situation works is if there's a stand down. So effectively, some of the workforce is stood down, and there is no hours for them to work. But you've kept them on the books. You're paying them the $1,500, and therefore you get the subsidy for the $1,500 you pay. That's a different circumstance from that, isn't it? That's just...
It is. This seems to be someone who's just saying, I'm not going to work, I'm not coming into work because
Yeah.
I'm going to take unpaid leave.
Yeah.
I don't have any paid leave, I'm going to take unpaid leave because I want the JobKeeper payment, I don't really want to come into the workplace. It's not really on. You can't just do that. I mean, there are different scenarios here that we've got a few more minutes to deal with some of the scenarios. Hopefully they'll come up. Another question we've got here, if I pay someone JobKeeper 2.0 top up, but then find that we are not entitled, will it be possible to get the top up payment back? Oh, so this is if you pay ahead of making assumption you're going to get it, and then when you go through the assessment regime, you find out you're not entitled to it. So I didn't think that was as much of a problem with the JobKeeper 1.0 because the approach the government took was a very generous approach, a pretty loose approach, if I can put it that way, deliberately so that they weren't causing problems for businesses. As we've already said, there's going to be a more stringent approach by the government. I think there'll be adjustments around the rules as to how this might apply so that businesses aren't finding themselves in the situation where they're having to run the gauntlet and pay out lots of money on a long shot of getting the payment back.
This is the timing issue again.
Yeah.
I mean, for people who just don't know clearly if they're going to transition or not, what do you do? Do you take the punt and sort of fund yourself for 4 to 6 weeks, hoping you're going to get reimbursed or not? But if you're making that payment, then you've got to be making that payment not on the basis because you're getting JobKeepers. Again, JobKeepers is just reimbursing you for what you've paid out on a legitimate basis. So that situation there sort of calls into question on what basis are you doing it? You're not sort of sharing the proceeds of JobKeeper. You'd only be paying it because you're obliged to pay it because of your employment relationship. But for the employer, I take the point here that until you know that you're into JobKeeper 2.0, you're going to have a lag period. And what do you do?
If you've got them working, you're getting the benefit of the work, and if you get the JobKeeper payment, you're right. It requires businesses to take a carefully considered approach.
That's back to what we were saying, getting ready, doing some analysis, understand your numbers, seeing where you are right now on the best information as to whether you're going to transition or not, or we're going to be close enough.
Different scenario to the last one we were talking about with the example of someone's working 30 hours part-time is one where you've got an employee who doesn't want to come into the workplace because they're concerned about getting infected. Now, this is a question that's come up a lot where you've got employees who are refusing to present for work because they are concerned about turning up to the workplace and catching COVID, either travelling to work via public transport or whatever means, or coming into contact with colleagues who they are concerned might have it. In particular scenarios, that might be a reasonable assumption or a reasonable apprehension. And what's really important from a workers' compensation perspective is that a person who has an anxiety about catching COVID in the workplace or on the way to work, it's a reasonable anxiety. And you don't even need that threshold reasonableness for the purposes of a workers' compensation claim to succeed. If I perceive that I'm going to catch it, even if it's not reasonable, and I suffer a psychological illness because I'm being given a direction to attend for the workplace, then I could suffer a psychological injury. So it's really important you handle people who are concerned about COVID or catching COVID with kid gloves. You've also got to be careful about jumping to the conclusion that they're just saying it so that they can get the day off or not come into the workplace so that they can actually get their JobKeeper payment. Sure, there'll be people that will be doing that, but I think it's really important you take a measured, carefully considered approach before you end up going down the path of sacking people for refusing reasonable directions. There will be a point where you'll get to that point where you will sack someone for failing to present to the workplace, but at the same time, you can't rush into that decision or that approach. There's one last question here. Can you please discuss impacts on leave without pay and workers' compensation? Note from, So we've got leave without pay and workers' compensation. So, look, if you want to agree to give people leave without pay, that's a matter for you and your employees. Leave without pay is a discretionary matter. It's not governed by the legislation. It might affect, certain payments, or it might entitle them to certain payments. You'll just need to consider what's happening in that particular environment. From a workers' compensation perspective, people who are incapable of attending for work will get their payments in the ordinary course. We've already talked about the fact that if people are on workers' compensation payments, they don't qualify for those other paid pandemic leave and disaster payments and the like.
So the leave without pay one, though, of course, again, this is a wage subsidy. Employers got to pay the wage before they can claim the subsidy. So if you've agreed for leave without pay, you haven't incurred the wage cost to claim the subsidy.
Yep, that's right. And that really brings us to the end of our session. We've got some, Iain's already made quite clearly some points today that you need to be looking at what you're doing going forward with your business. We can assist you if you need any help with looking at those restructures, whether it's from a broader business perspective, as Iain's already talked about, or just about your staff, or about both. We can help you out with that. We can help you out with the laws as they evolve as well, which we intend to do both through these webcasts and our newsletters from time to time. We can help you out with your policies and procedures and processes. You might need to review those as well. In relation to workers' compensation, I note that we've got a workers' comp training session in mid-September. If you're interested, go to our website and click on training and you can register there. That's about managing workers' compensation claims more broadly, not from an insurance perspective, but from an employment perspective. We've also got our property team who can help you with leasing questions. I know we've had a number of leasing questions in recent days that have come through, very significant ones, businesses making very serious decisions, much in the vein of Iain's sage advice earlier about really having a look at what you're doing going forward.
Sage advice, always good. More expensive, I think, sage advice.
Well, Iain, thanks for joining me today, and thank you all for joining us, and we'll see you next time.
I'll let you guard up. Suit you.